And today's our subject is practice of life insurance. It is for the licentiate level, and the code of the subject is IC02, practice of life insurance. Today we will look at the first two chapters. First is practice of life insurance, and another is premiums and bonuses that we will see. We'll start with the presentation first, and be ready with your questions so that we should be able to discuss on it. Please, we'll continue with the presentation. In the first chapter, the topics to learn are overview of the Indian insurance market. In short, we will see about it. We'll talk about the activities and organizational structure of a life insurance company, a typical company, and then of LIC of India in particular. We'll also talk about appointment of life insurance agents and their functions. We'll look at remuneration to agents and continuation of agency as to what are the requirements for an agent has to fulfill to continue with his agency. We will also talk about trends in the life insurance distribution channel, the newer trends in our country and across the world. If you look at overview of the Indian insurance market, we have to go back to the Pioneer Act, that is Insurance Act 1938. Its section 2 subsection 11 defines the life insurance business. It says that life insurance business is the business of effecting contracts of insurance upon human life. It includes any contract whereby the payment of money is assured. A fixed amount of money is assured on death, but it should not be death by accident only, or the happening of any contingency dependent on human life. What that contingency can be, which dependent on human life, basically two, survival and death, but there can be disability also, and any contract which is subject to the payment of premiums. Premium is the cost of insurance which the insured person is supposed to pay. He has to pay that premium for a term which again dependent on human life. So growth of insurance business in India, if you look at the Indian scenario, we can see that postal life insurance, that is popularly known as PLI, it started from 1st February 1884. This was the pioneer. Initially, it was exclusively for benefit of employees of postal department. In 1888, that is after 4 years, it was extended to employees of telegraph department as well. And after independence, that is 1947, it was extended to employees of central and state governments, local bodies, municipalities, Reserve Bank of India, nationalized banks, public sector undertakings, port trusts, universities, government-aided educational institutions, councils of scientific and industrial research, railways, defense services, and so on. That means it has covered almost all the government sector in India. Then, rural postal life insurance, commonly known as RPLI, was started on 24th March 1995. Note that PLI was meant for the city people, or you can say urban people, and RPLI was extended to general public. They may not be the government employed people, and it was started in rural areas since 24th March 1995. So that was the pioneer scenario in India as far as life insurance market is concerned. Life Insurance Corporation of India, the only public sector corporation, it was formed in 1st September 1956. It was formed by merging of life insurance business of Indian companies, all those were existing in that year. branches of foreign companies and some provident societies who were running the insurance business, life insurance business. Life insurance business of Postal Life Insurance PLI and insurance departments of some states were not merged with LIC. So PLI was altogether independent and LIC started upfront. In the year 1999, that is after almost say 43 years, life insurance sector in India was opened up for business to private players. As of now, we can see that 24 life insurance companies, including LIC, are transacting life insurance business in India. Just have a look at the names of those companies. Bajaj Allianz Life Insurance Company Limited, Birla Sun Life Insurance Company Limited, HDFC Standard Life Insurance Company Limited, ICICI Prudential Life Insurance Company Limited, ING Vaishya Life Insurance Company Limited, and Life Insurance Corporation of India, that is the public sector, Max Life Insurance Company Limited, PNB MetLife India Insurance Company Limited, Kotak Mahindra Old Mutual Life Insurance Limited, SBI Life Insurance Company Limited, Tata AIA Life Insurance Company Limited, Reliance Life Insurance Company Limited, Aviva Life Insurance Company Limited, Sahara India Life Insurance Company Limited, Shriram Life Insurance Company Limited, Bharti AXA Life Insurance Company Limited, Future Generali India Life Insurance Company Limited, IDBI Federal Life Insurance Company Limited, Canara HSBC Oriental Bank of Commerce Life Insurance Company Limited, three banks, two of them from public sector and HSBC, they formed this company. Econ Religare Life Insurance Company Limited, DLF Pramerica Life Insurance Company Limited, Star Union Daiichi Life Insurance Company Limited, the Star is for the Indian Bank, India First Life Insurance Company Limited, and lastly, Edelweiss Tokyo Life Insurance Company Limited. 23 companies are limited companies formed under Companies Act, and Life Insurance Corporation of India is a public sector undertaking, the only public sector undertaking in India transacting life insurance business. Liberalization of the Indian insurance sector is the most recent change, we can say, and Insurance Act 1938, which is amended from time to time and is being amended, it governs insurance business in India. So that's a pioneer law, pre-independence, and it lays down rules and regulations for the insurance industry. In 1999, IRDA Act, that is Insurance Regulatory and Development Authority Act, it was passed, which regulates insurance business in India. In 2000, insurance sector was liberalized and opened up for business to private sector, and FDI, that is foreign direct investment, was allowed up to 26%. Foreign insurers were allowed to enter into joint ventures with domestic insurers. Emergence of innovative insurance products. This is because of the liberalization of the Indian insurance sector. We can see many innovative insurance products in the market because of this. And most importantly is the deeper penetration of insurance to the rural people, to the urban people, all over. And much needed competition is started. It was said that LIC was the monopoly, and because of this liberalization, opening of Indian insurance market to private players, this competition is started. And better customer service was ensured, obviously because of the competition. We can see the activities and organizational structure of a typical life insurance company. And two primary objectives of any life insurance company. First is to spread life insurance widely with a view to reaching all insurable persons in the country. The word is very important, insurable persons, and providing them adequate financial cover against death at a reasonable cost. So all these three words are very important. The person has to be the insurable one, He should be provided with the adequate financial cover against death that is meant for his dependents, and the cost of that insurance should also be reasonable. That is why in 2005, micro insurance regulations were enacted. To maximize, second objective is to maximize mobilization of people's savings. One way of compulsory saving, but by making insurance-linked savings adequately attractive. Especially in India, this is very important, that mobilization of people's savings, how you can do it? By making the schemes, insurance schemes, adequately attractive. Essential activities of a life insurance company, if we can see a typical life insurance company structure, primarily it is obtaining applications or proposals from prospective buyer insured. This is very important, that the buyer has to apply for, he has to propose for the life insurance. And he is called as the insured. That prospective buyer will be called as insured once the policy is sold to him. It is said that insurance is never bought, it is always sold. Still we are insisting that the prospective buyer should apply for the insurance, life insurance. The next activity will be to underwrite that proposal, that application, that is examining and making decisions on proposals for insurance. Whatever is obtained from the general public, the insurance company has to underwrite it. That is, assess it, assess the risk, assess the person, whether he should be insured or not, and if at all insured, to be insured, on what terms. This is called as analyzing selection and classifying of risk by assessing the economic, physical, medical and social status of a proposer, that is the buyer, prospective buyer, while accepting the risk for life. Third activity can be said that issuing the insurance policy document which incorporates the terms and conditions of insurance cover, that how the cover will be provided and so on. We have to note that insurance policy is a documentary evidence of insurance contract. This contract is between the insurance company, which is typically known as the insurer who provides insurance, and the policy holder, who is typically known as insured, that is to whom the cover is given, cover is offered, conveying details of risk coverage of the insurer as to in which conditions the insurance cover will be provided and so on. Keeping sight of conditions of insurance contract by either party. And the conditions of insurance contract are obviously meant for both the insurer as well as the insured. The insured first has to pay the premium to obtain that insurance cover, and timely payment of benefits by the insurance company to the insured himself or the nominees. Attending to various servicing requirements. Generally what happens is the life insurance contract is a lifelong contract, typically, by its name only suggests. Then various servicing requirements can arise in this long period, lifelong period. Say nominations, assignments, surrenders sometimes, then payment of claims, which is the obvious. Then alteration of terms and conditions during the term of the policy. Depending on the wish of the life assured, it can happen. And other important activities we can say, that is the compliance with laws and regulations, which is obvious for any commercial organization, for life insurance company also, it is required. And most importantly is the investment of funds. There is no product, so no production cost. Whatever premium that is being received from the insurers, that is the policy holders, life assureds, all those has to be invested properly. And maintenance of accounts, which is the obvious one for any commercial organization, any business organization. Management of personnel, a typical activity of any company. We can say that departments of a branch office of an insurance office, a typical branch office. Being the service-oriented or customer-oriented organization, almost 90% of activities of any life insurance company which are relating to policy holders, right from proposal to claim, receiving the proposal to paying the claim, all activities, almost 90% of activities are handled at branch office in a life insurance company. So business development or agency or marketing, whatever name you can call it, this will be the first department which will look after development of agency force, market development and business growth. Then the new business department will be there, which will look after receiving, scrutinizing and underwriting of new proposals and issuing policies. Then the policyholder servicing department, most important, which will look after administration of policy, monitoring of premium payments, lapses and revivals, alterations, nominations, assignments, surrenders, loans and claims. All this comes to policyholder servicing. Then accounts department look after financial aspects. Then we can have a head office of an insurance office which will control the branch offices spread across the area. Actuarial department. This is the most important in any head office of a life insurance company. It looks after studying claims experience, doing valuations, declaring bonuses, monitoring adequacy of premiums. You can say talk about solvency. Then of course developing new products, catering to the various needs of the insurable public, setting underwriting standards depending on the changing scenario, social, economic, financial, worldwide, and most importantly studying mortality rates, how they are changing is the area of actuarial department. Then investments department, it looks after investment of funds, studying and using opportunities for maximizing returns, obviously for the benefit of the policyholders as well as the company. Planning department, because it's a lifelong process, long-term process, marketing strategies has to be dynamic and distribution channels, the planning department looks after it. Then legal department, it is most important to look after compliances with Insurance Regulatory and Development Authority, that is IRDA's requirements. Advertisement required for any commercial organization or insurance company also. It will look after publicity and public relations, most important. Then this is a typical department: personnel, human resources development, that is HRD, training, purchases, administration for office upkeep and so on. We'll look after the organizational structure of the public sector company, public sector corporation, that is Life Insurance Corporation of India, typically known as LIC, popularly known as LIC. It has the central office located in Mumbai. It has the joint ventures with many other companies in foreign as well as in India. It has many foreign offices located across the world. And in India, central office, under the central office, there are 8 zonal offices spread across the pan-India. The zonal offices will control divisional offices. There are 113 in number as of now. These divisional offices will control the branch offices, which are in number 2048 as of now. Under the branch offices, we have satellite offices, which are 1275 in number as of now. And the newly introduced are mini offices, those are 701 as on today. And in the budget of this, in the current budget, financial budget, it was prescribed that the LIC should have its presence in the area where the population is 10,000 and more. So mini offices concept is started therefrom. Organizational structure of private life insurance companies, because it's a new for them also, for the people also. Initially, they were having only 2-tier structure, head office, and then it will control the branch offices, and these branch offices will report to the head offices. But with business expansion, increase in number of offices in different areas as well as increase in the tires, number of tires to control these branch offices. Then they started with zonal offices, regional offices, which will be the link between head office or corporate office and branch office. If you look at the PLI, that is Postal Life Insurance, the organizational structure will be little different. There is a Chief General Manager who is head of directorate, and he functions under supervision and control of Postal Services Board, which is constituted by central government to look after activities of Post and Telegraph Department. And under him, there will be the district postal head officer at every district, which looks after all postal life insurance operations in district, including sales as well as payment of claims. As we have seen that life insurance is never bought, it is always sold, the importance of agent is emphasized here. Appointment of life insurance agents and their functions we'll look at. Typically, by definition, agent is a person who acts on behalf of another person, and that another person is called as principal. Insurance agent is a person who do the job of meeting, explaining and persuading potential customers. So in this case, his principal will be that insurance company and agent will be representing that insurance company. Agent has to be licensed from Insurance Regulatory and Development Authority, that is IRDA, under Insurance Act. He has to procure that specified license from IRDA. Licensed agent can work only with one life insurer. So an agent can represent only one life insurance company. Agent may be individual or corporate body. If it is a corporate body, then he will be called as corporate agent. Agent means you can call it by any name. He is insurance salesman, he is insurance agent, he may be corporate agent, it may be bank, it may be broker, it may be insurance advisor, consultant, and so on. Whatever name you call. But he will represent the life insurance company. Then other than the agent, we have the provision of insurance broker also. The only difference is that he will be the mediator between an insured, that is life assured, that is policy holder, and insurers, and charging commission only from the insurer. Don't go by the word broker. He will charge commission only from the insurance company, insurer. But the main difference lies here. Insurance brokers, they are independent. Independent means freelancing. They are not attached to any particular insurer, unlike an agent. The brokers does business with more than one insurance company, obviously, and the broker represent more than one insurance company. That means, unlike the agent, as we have seen that agent will represent one insurance company, one life insurance company, but brokers, they can represent n number of insurance companies depending on the choice and need of the buyer, the life assured, the insured, the prospective buyer. Need of agent in insurance selling. Always remember, it is said that life insurance is never bought, it is always sold. So the concept of insurance is a typical concept. It needs to be explained face to face. And personalized guidance is possible only in personal interaction. Personal details of a prospect, that is the prospective buyer, the person who wishes to insure himself, which are important for risk evaluation vis-a-vis prospect's special needs, can only be known and discussed personally, only through the personal meeting. Insurance provides timely financial security over and above any other investment avenue. Very important. It's not only the financial security, it's not only about the returns, but it is the security over the contingency dependent on human life, as we have seen. And each prospect has special needs requiring specialized solutions. Even though the insurance needs may be, you can say, the typically same for all humans, but each prospect will have the special needs depending on his status, his financial position, his family status, and so on. Personalized guidance is possible only in a live interaction. So all this emphasizes the need of an agent in insurance selling and typically life insurance selling. Life Insurance Corporation of India, that is LIC, as of now has 11.72 lakh agents. They may be working part-time or full-time. Postal Life Insurance is a typical organization or typical system, you can say. It appoints unemployed youth and extra departmental branch postmasters to procure business under RPLI, that is Rural Postal Life Insurance. Retired employees of Post and Telegraph, that is P&T department, and railways are employed as field officers on commission basis to get business. To be appointed as a life insurance agent, a person has to be, he should be competent to enter into a contract, and obviously he should be major, that is 18 years of age. He should be of sound mind, obviously. He should be free of guilt of criminal breach of trust, cheating, forgery, misappropriation, or attempt to commit any offense. So no such crime should be recorded against him. He should be educated up to 10th standard if he is residing in rural area, or must have passed 12th standard if he is in non-rural area, city area, or any equivalent examination as may be prescribed by the competent authority. He should have been trained for 50 hours from an institution which is approved by IRDA, Insurance Regulatory and Development Authority. And then ultimately he should be successful in the examination prescribed by IRDA. Companies, firms, banks, cooperative societies can become corporate agents. We have seen that agent can be individual or agent can be corporate body. One or more persons can be designated as corporate insurance executives, CIE, who are required to obtain licenses just like individual agents in case of corporate agents. Other members or employees can be specified persons. So the difference is there. Corporate insurance executives and specified persons. They will work for the corporate agent, these specified persons. And they are required to obtain certificates of what? Undergoing training and passing examination. Agents in Life Insurance Corporation of India, LIC, what happens in their case is, generally, typically, supervisory level, regular salaried employees, they are called as development officers. They are appointed to work as a mediator between agent and branch office, that is LIC's office. Duty of this development officer is typically to recruit and train suitable persons. These will be called as tied agents, tied to development officer. There will also be the direct agents who are senior, experienced, and who work independently, and they will directly report to the branch manager, branch in charge. We have also the provision of career agents, maybe city career agents or rural career agents. They are selected directly by LIC on the basis of test and interview, and they are later given extensive training so that they can develop agency as a career, their career, rewarding career. Let us look at the functions of agent. Foremost is solicit and procure life insurance business for insurer. IRDA, it specifies some code of conduct for an agent, life insurance agent. First, identify self and insurer, that is the principal, that is the insurance company. The agent should identify himself and the company. He should disclose the license given to him to the prospect, that is the buyer, life assured, on demand. Whenever the buyer demands the license, he should be able to produce it. He should explain all available options to prospect. He should recommend a suitable plan considering the needs of prospect's needs. We have seen that the individual needs will be different from the prospect to prospect, from the person to person. He should explain nature and importance of information asked for in the proposal form, which forms the basis of the contract between the life assured and the company. He should impress upon prospect the need to disclose all material information truthfully. He should make all inquiries about the prospect also. This inquiry will relate to the personal history, medical history, special medical reports, admission of age, etc. He should inform insurer, that is insurance company, about any material fact such as habits that could affect underwriting decision, that is whether to accept the proposal or not, and if at all to accept, on what terms. He should inform the prospect about acceptance or rejection of proposal. Because he is a link between the prospect and the insurance company, it is his duty, his code of conduct. He should ensure delivery of policy to the insured prospect. He should advise the insured about nomination. What is the importance of nomination, how he should do it, to whom he should nominate. Of course, he should advise about. He should assist the insured and claimant in complying with requirements. Of whatever nature servicing requirements are there, it is the duty of the agent to assist the life assured or the claimant. Now obviously the remuneration to agents and continuation of agency is very important. For continuation of agency, agent must procure and complete minimum amount of business called as MAB specified by insurer in each agency year. IRDA has no role to play. The life insurance company typically will specify about the minimum amount of business which an agent should fulfill in agency year. And termination of agency is also probable if the license is cancelled or not renewed when due. Typically it is due every 3 years for renewal. Legal disqualification such as permanent incapacity, conviction for criminal misappropriation, criminal breach of trust, cheating or forgery is levied against the agent. His agency can be terminated. Most important, if he offers rebate of whole or part of his commission which is receivable from the insurance company to the prospect, if he offers rebate. Remuneration to agents can be in any form. It can be payment of fixed monthly salary. It can be payment of commission proportional to premium procured. Typically it is like this. Or it can be part payment of fixed monthly salary plus part payment of commission proportional to obviously premium procured. Typically in case of career agents, as we can see. Commission to agents, if you look at, it is generally percentage of premium received by insurer and paid by insured. Differ from year to year and from product to product, obviously. Premium, whatever the insured pays to the insurance company, and percentage of that premium will be paid to the agent as his commission. Bonus commission can be paid as an incentive for higher performance. It will be percentage of commission. So percentage of premium will be the commission and percentage of commission can be paid as bonus commission. Insurance Act provides also for hereditary commission. In case of the agent's death, the commission that whatever was due to that agent after his death can be paid to his legal heirs or nominees, provided the agent has worked for minimum 5 years with minimum business of rupees 50,000 or minimum 10 years without any restriction of business condition. Then the remuneration or benefits to agents also covers term insurance and gratuity benefits typically paid to LIC agents by LIC. Term insurance and gratuity benefits, it will be equal to average annual commission earned in 3 preceding agency years provided the agent was appointed as agent before the age of 50. He was died before the age of 60. He has an in-force insurance policy on his own life for minimum sum assured of rupees 5,000. And he has completed 3 years as an agent. Let us note that agency year is a period of 1 year, but it starts from the date of agent's appointment, whatever date in a month, to the end of the month in which 12 months are completed as agent and every successive period of 12 months. If you look at the example, suppose an agent is appointed today. Yeah? Today's date is say 15th October 2013. Then his agency year will start from today and it will go up to October 2014, but 31st October 2014. And then every year 12 successive months that will be treated as his agency year. Now let us look at the trends in life insurance distribution channel. Agents, most important, maximum percentage of life insurance business is done by the agents typically in India. Then there can be brokers. As we have seen, the brokers will represent more than one insurance company. Then we have the bancassurance. Insurance companies, they are tied up with banks for business purposes, business partners, and through banks they procure the life insurance business. Then we have the corporate agents also. As we have seen, they will not be the individual bodies, but they will be the corporate bodies. They can work as corporate agents. And then direct mailing, it is also started, maybe to the existing policy holders, to the new population and so on. Direct mailing can be done. Web portal, that is also available, that is online sale, and direct mailer business, that is also possible. Let us look at what we have seen in this chapter. Let us summarize it. In the case of life insurance, let us note that it is normally called as life assurance. The insurer, that is the insurance company, agrees to pay the insured or their heirs in case of death a certain sum of money on death or on the happening of an event which is dependent upon human life in consideration of premiums paid by the assured. So the insurance company promises to pay, agrees to pay. In 1956, the life insurance business in India was nationalized and the Life Insurance Corporation of India (LIC) was formed on 1st September 1956. In India, in the year 2000, the insurance sector was opened up to private players. The primary objective of life insurance companies is to spread life insurance widely to insurable people and to maximize mobilization of people's savings. The Life Insurance Corporation transacts business throughout India with a 4-tier structure, as we have seen: central office, zonal office, divisional office, branch office, and now parts of branch office are satellite office and mini office. Agents are essential for selling life insurance. The major function of the agent is to solicit and procure life insurance business for the insurer, the insurance company. Agents may be remunerated in terms of fixed monthly salary or commission as a percentage of premium paid by the insured, life assured, policyholder. All insurers insist that a minimum amount of business must be done by an agent in each agency year. And this minimum amount of business is different from company to company. The agency may be terminated on non-fulfillment of the minimum business requirement. So these were the points we have seen in this chapter, that is life insurance organization. One question is there: how much commission will be received by agent for 1 lakh policy? No, the question is whether this 1 lakh is sum assured or premium. Suppose it is let us say it's a premium, 1 lakh is premium. Then how much percentage should be paid to the agents? It is the decision of that typical life insurance company. IRDA will provide or will specify for the maximum amount of commission or maximum percentage of commission that to be paid to an agent. That is how much maximum percentage of premium to be paid to agent. But typically it depends on the discretion of that company. Now, as we have seen, 24 life insurance companies are there, so it's a decision of that company. Yeah. So with this, we have finished the chapter 1, life insurance organization. Thanks for this attendance to this chapter 1's webinar.